Welcome to Scientific View, Episode 3. This video summarizes the book Technical Analysis Using Multiple Timeframes by Brian Shannon. We will cover the key takeaways and actionable strategies. The book aims to teach how to combine multiple timeframes for better trading decisions, targeting day traders, swing traders, and investors. It uses core tools like price action, volume analysis, and moving averages, emphasizing practical, repeatable setups and risk management. The core idea is that higher timeframes define the market bias, middle timeframes confirm setups, and lower timeframes provide precise entries. This sequence, identify direction, confirm setup, execute entry, reduces noise, and turns random trades into a repeatable system. In the timeframe hierarchy, the higher timeframe determines the trend and major support/resistance. The mid timeframe validates the signals, and the lower timeframe finds the exact entry and stop placement. A typical example is daily, 4-hour, and 15-minute charts. Market structure begins by mapping swing highs and lows on the HTF to determine trend direction and key zones. Use the HTF context to avoid being misled by noise or false breakouts on the LTF. Structure should confirm or reject your bias across all timeframes. Moving averages, such as the 8, 20, and 50 EMAs, visualize momentum and trend. HTF MAs show long-term bias and dynamic support. Always use MAs as confluence with price action, watching for bounces, breaks, or consolidation around these levels. Volume validates price moves. Strong breakouts usually involve rising volume, while low volume breakouts often fail. Look for volume spikes at key HTF levels for meaningful signals, and use volume to confirm the strength of retests. When executing entries, always trade aligned with the HTF bias. Use LTF patterns, like a retest of an HTF level or a momentum candle. Prefer entries after a break and retest, timing them to achieve tighter stops and improve your risk-to-reward ratio. Place stop losses beyond logical structure, like an HTF swing high or low. Define your risk per trade as a percentage of your account, then calculate your position size accordingly. Use LTF structure to tighten stops without contradicting the HTF context. For trade management and exits, predefine targets using HTF levels. Use partial profit taking to reduce risk, and trail stops using LTF structure as the trade moves forward. Avoid emotional exits by strictly following your predefined rules. The book covers several common setups, including breakouts confirmed by the HTF trend, pullbacks to support/resistance followed by an LTF trigger, and reversals at major HTF structure confirmed by volume. Discipline is key. Stick to the HTF bias and avoid chasing low-quality LTF opportunities. Always use a checklist before entering a trade. Maintain a trading journal to track patterns and focus on expectancy rather than individual wins. Brian Shannon emphasizes always trading in the direction of the HTF bias and using multiple timeframes consistently. Price and volume are primary tools, while indicators are secondary. Be patient, wait for confirmation, and practice thoroughly. A detailed example trade involves identifying an uptrend on the daily HTF, observing a pullback on the 4-hour MTF, and then waiting for a bullish trigger on the 15-minute chart LTF. This allows for a calculated stop, target, and position size. Crucial mistakes to avoid include trading against the HTF bias, overtrading low-quality setups, relying too heavily on complex indicators, and ignoring position sizing. Consistently journal your trades to learn from errors. Here is an actionable checklist. Identify the HTF trend, scan the MTF for confirmation, wait for an LTF trigger, define your stop loss and position size, set targets, and finally, journal the trade for future learning. For next steps, read the book for more detail and practice MTF scanning and backtesting for at least 30 trading days. Paper trade setups to build confidence and keep a concise trading journal of your process and outcomes. Thanks for watching this video. Please like, subscribe, and press the bell for more content from Scientific View.